Hi guys, Anthony here and welcome to another video. In my last video, I talked about the end of the tax year and how important that is for your ISA investments. But what's interesting about the end of the tax year is it's the deadline for a number of allowances to run out and reset for the new tax year. And if you don't use those allowances, you lose them. Now, if you're one of those people who's focusing on maxing out your ISA, go and check out that video. But there are others who own buy-to-let properties or significant investments outside of that ISA wrapper. And this means that you are likely to be charged tax. However, if we can reduce our tax bill even by a little, then it all helps. As we know, that money, if invested properly, can compound into huge amounts in the future. And you don't want to give up those gains by paying it out in tax. So if you do hold a number of investments outside of an ISA wrapper, you may not know that there are different tax advantages available and different tax allowances which you can use. And a bit like Cinderella, at midnight on the 5th of April, those allowances will run out and be reset on the 6th of April. And if you don't use them, you lose them. And first up we have pension. And a bit like ISA, this is a tax advantaged account, or more commonly known as a SIPP, standing for Self-Invested Personal Pension. A SIPP allows someone to invest up to £40,000 each year into their pension. As a result, the government will give you a 25% bonus if you're a basic tax rate payer, and an extra 25% if you're a higher rate taxpayer. But what is great is they can use their unused allowance from 3 years ago. So if you haven't been investing into a pension, but 3 years ago you didn't max it out, then you have up until the 5th of April to use that allowance. And if you still have money left over and you don't use it from 3 years ago, then that will be reset and it will just be a rolling 3 years each and every tax year. So remember, you have up to 40k this year and also any unused tax allowance from 3 years ago. And after the 5th of April, it's reset. Another allowance that you're allowed is the allowance for the junior ISA. Essentially, a junior ISA is an ISA for your kids. It means that as soon as your kids are born, up until the age of 18, you can invest up to £9,000 on their behalf. And that essentially can set them up for life, because £9,000 compounded over 18 years can turn into huge sums of money. And if you're interested in setting your kids up for life, hit that like button. And what is great about junior ISA is that £9,000 each and every year for 18 years can be invested, and all those gains are completely tax-free. So when your kids turn 18 and can take advantage of that money, as they can do whatever they want with it, all that money is completely tax-free. And a bit like a normal ISA allowance where you can invest up to £20,000 but is reset each and every tax year, it's exactly the same for a junior ISA. You can invest up to £9,000, but at the end of the tax year it's reset. So again, if you don't use the maximum £9,000, you will lose it. And for those of you who hold investments outside of an ISA or a pension, there are also a couple of allowances. There's a capital gains tax allowance and a dividends tax allowance. Firstly, the capital gains tax allowance, and this is really important for anyone who holds stocks and shares outside of an ISA, or if you're an investor into buy-to-let properties. Because if you hold things outside of an ISA or a pension wrapper, then you will have to pay tax. But there is allowances reducing the amount of tax that you need to pay. So if you've done well and you've bought something low and you're going to sell something, or you've sold something high, you've made a gain on that. However, the government comes along and wants to take their slice out of it. But with the capital gains tax allowance, you're allowed to have £12,300 tax-free. And again, come the end of the tax year, all of that is reset. So make sure you claim it. And finally, if you can receive dividends from any of your investments, these could be buy-to-let properties, stocks and shares, or as directors of a company, then you will have to pay tax on those dividends. The dividend tax allowance is £2,000 per year. And again, if you don't use it, you lose it. So make sure you're taking advantage of the £2,000 dividends tax. £2,000 isn't loads, but if the majority of that dividend comes from your investments, hopefully you hold most of that inside your ISA. So that £2,000 is just a nice extra bonus. Overall, I hope this video has helped you understand what other allowances there are out there for those investors who are holding things outside of those tax advantages accounts such as ISAs and pensions. So as to be quite honest, no one wants to pay more tax than they need to. And if you can take advantage of the government's allowances for these tax, it means that you can save a little bit of money and you can invest it and watch that money grow. And make sure that you don't leave any money on the table. It's yours. Make sure that you claim it. And if you are looking to invest into an ISA, a pension, or a junior ISA, then check out the link in my description below for Nutmeg. Nutmeg is my favorite investment manager, and it's a place where you can just give them your money and they'll invest it on your behalf, charging minimal fees. Invest into a range of ETFs across different geographies, depending on your risk tolerance, which I think is perfect for most investors. And if you use the link in my description below, you'll get 6 months free management fees. But if you're interested in investing into the stock market and want to pick individual stocks yourself, then use the link in my description to Trading 212. This is a great place for beginners to learn how to invest into the stock market because it's a free trading platform. And if you use the link in my description, you'll earn a stock with a value of up to £100. And before you go, make sure you follow me on Instagram at Anthony Cotter Finance. I post daily all about personal finance and investing. And if you have enjoyed today's video and you want to see more videos from a finance professional talking about personal finance and investing, hit that subscribe button. And I'll see you next time.